I'm here again. So welcome to this video. And I always say learn, implement, and then grow. Because these ideas, if you don't implement them, and implementation is the actual putting an idea into action, then there's no any difference you're going to make. So in this video, I'm going to show you two things. So one, the fallacy of FOMO. FOMO just means fear of missing out. How it can lead you to huge losses. Yeah. So fear of missing out, that is FOMO. And also I'm going to emphasize on fundamentals. Yeah. Fundamental analysis and of course technical analysis. Those are the key things I'm going to talk of in this particular video. And I'm going to reinforce with this example that I have here so that at least you can see the essence of whatever points I'm going to share with you in this particular video. The terminology or whatever, the word, the fallacy I'm talking about, the FOMO. The FOMO is the impulse of feeling like you are the one losing or we're the one missing out an opportunity. When you hear people talking about of success, people sharing their success stories, you feel like I'm the one left out. So quickly, because you don't have time to maybe do some analysis and ensure that you've done the enough due diligence, yeah. You end up jumping into some decisions that can cost you dearly in terms of finances. I want to show you something here. Now, in this illustration, I'm going to use ETF, exchange traded fund, exchange traded fund, and this ETF is called gold issuer, or it was previously called a new gold or ABSA new gold. So it is an exchange traded fund, and if you say exchange traded fund, it means that it is that fund that it is traded on the exchange. For example, Nairobi Securities Exchange. So it's liquid. You can go there so long as there is enough volume. People are bidding to sell and the people are bidding to buy. Trade can always take place. But I must say that it is different from a buying company stock, in as much as it's also traded in the stock exchange or securities exchange, but it's a bit different from stock because this one won't pay you dividend. Whatever you're going to gain from this is capital gains alone. Now, you must remember, if you've been keen following the market news, last year, 2025, around this date, October 13th, gold was really doing well. Yeah. So, and people were really speculating on gold market, gold news, as a commodity, it was really doing well. Yeah. So, being that ETF, this gold issuer or gold ETF or gold fund, gold issuer or new gold in short, which trade in the exchange, the price was shooting. Yeah. So the price was shooting, the rally was because that this ETF usually track the underlying assets. So, and the underlying asset in this particular one is gold, and at that time gold was really doing well. So people were speculating that the price would continue to bullish, right? So that was reflected even in this particular gold. So I want to talk of I want to take an example of that person who unfortunately entered the market on this particular day. You bought gold on this particular day, 13th October 2025. So that is the person I'm going to describe it here. So if you're that person, because due to FOMO, you felt like, let me just jump in, because this thing I see, even like if I look at the technical side, the price are shooting. This thing most likely it will go to, you create your figures to 10k per unit, right? Because at this time, this date, it was trading at 8,000. The prevailing market was 1 unit was being traded at 8,000 shillings, 1 unit, and it had been moving through 3,000, 4,000, 5,000, 6,000, and now at that time it was 8,000. Then something happened. The speculation ended, the rally ended, and now price started falling. And as we speak today, this date, 20th, that is today, the price is currently, is 1 unit is going at 5,695 shillings. So in case you're this person, then what does that mean financially? That's what I'm explaining here. So as usual, let's do our calculation to see what this means. Now, so in this example, I'm assuming that the amount invested, or the amount you invested was 500,000, and I'm just assuming that the brokerage fee and other fees accounts to 2% of the transaction volume. So normally we have to calculate cost adjusted price and just take 1.02 times times the prevailing price at that time that you buy, that is 8,000. So it comes to 8,160. Then from there we calculate number of shares or number of units that you are going to have. So I say that you just take 500,000, you divide by the cost adjusted price per share, that is 8,160. Then we get what? Number of shares here, only 61, because you see the price per share, the prevailing price is a bit higher. So you will get, the more the bigger the price, or the huge the price, the lower the number of units you can purchase, right? So from there we calculate the portfolio value currently. So how do we calculate portfolio value? I say portfolio value, you calculate by multiply the number of shares that you have by the current prevailing price per share. So if you multiply that, we see that yes, we invested 500,000, but the portfolio value will read 347,000 347,395. Yeah, shillings. Then from there, this means that the portfolio value is much lower than the amount you invested. So what does that mean to an investor? It means that you have made what we call paper wealth loss. You've incurred paper wealth loss. You've incurred paper wealth loss. So we will calculate by how much. Yeah. So by how much? We said that if you divide this, we are getting roughly 61. So for you to get the actual amount that you will use to buy the shares, you just take this amount of shares bought by what? By the price per share with this one. So if you do that, multiply this by this, yeah, you will get the actual price. It will be it will be slightly less than what 500,000, because there's some decimals. So today I want to account for every unit or every shilling. So if you multiply that, then you less the current portfolio value. So that gives us what? That gives us the paper loss. The paper loss. Paper wealth loss comes to 150,365 shillings, right? Then there's something I want also to tell you. Sometimes at this particular point, now that's where emotional management comes in. You must be very strong, because you have lost 150,000. This reads as a loss. So you must manage your emotions, right? Because at this time, if you sell, then you are going to increase the losses. Why? Because we are going to incur what called stop loss costs. Because if you sell this, I said very well that if you don't, capital gains or capital loss, if you don't sell, there's no any charges like the taxes. They don't attract taxes, yeah. But the moment that you sell, then the statutory deduction will apply on this. So that statutory deductions will increase, will lower even this fund further, yeah. So as if you decide to sell at this particular time, then this is automatically you shall have, we say that you've locked in losses, or we can generally say that your stop loss costs will be 157,312 shillings averagely, or approximately 157,312. And that one, now we say you've rested the case. So like you've made that the loss that you've made. But if you don't sell, then there are chances that the trend can rebound. Yeah, the price can rebound, and maybe you can break even, or you can even make profit. But now the question is when. We don't know when. So that's why I say that calls for fundamental analysis, yeah, apart from the technical analysis, that maybe the charts that you look at and you say the price is shooting or it's going down, the trends, yeah. So that's now will call for your fundamental analysis, so that you can inform yourself whether to keep waiting or to stop loss. Because maybe from there, price can also still go down, and if it goes down, then this figure will increase, right? So that's what I wanted to share with you for today, that before you make the decision of buying something, don't be influenced by FOMO, the fear of missing out. Ensure that you do your due diligence, conduct fundamental analysis, and fundamental analysis you only do if you have some background knowledge in finance. So thank you. And if you have any queries with regard to this stocks investment, so just reach out